following is a technical analysis on Penn National Gaming Incorporated, a company of the consumer cyclical sector in resorts and casinos here off the daily interval, where we have put in a nice technical structure in a bullish falling wedge pattern of this primary reactionary high downtrend line off the March 2021 reactionary high, with a continuous reactionary highs really across the board there to strengthen the validation of that structure, where we put in a nice clean divergent low, bullish and positive divergences among all three technical momentum indicators, with a multitude of reactionary lows to help strengthen the validation of this primary bullish falling wedge pattern. And those divergences have only continued to construct on a much larger scale, going back since May of 2022 of last year, synchronized with bullish crossovers on the oscillator and moving average convergence testing their zero line thresholds as of now. Additionally, you have the oscillator histogram starting to print green data candle closes above their zero line thresholds in a nice looking hill formation pattern, and again just as bullish as you can possibly get here, whereas you already popped the 50-day moving average and are currently testing the 236 fibs retracement, call it a 2712 price resistance, which will be a dual if not technically triple line of inflection points coinciding with this primary reactionary high downtrend line there. And bull traders, long traders, they want to see a potential back test of that 2614 price support, whereas we are trading at 2680 spot price as of now. They want to see that key inflection point defended. They want to see a potential even a back test. You have a nice clean support zones right below two dual support levels with the 50-day moving average and that 2614 price support there, whereas bull traders want to defend this key inflection point really at all costs there. You could even add an additional support level zone right amongst these reactionary highs and reactionary lows there. Just again, a pretty solid support level to begin your scaling in process there, and hold this key inflection point. And bull traders want to see a solid green candle close below above that primary reactionary high downtrend line, with even a potential back test where bull traders and or long traders need to defend this dual line of support heavily for that next sustained move up to the 382 fibs retracement, coinciding with the 2992 price resistance there. Pretty significant resistance zone there, and I would only suspect a big wave of short covering and long traders if broken above that key inflection point, with additional targets here honing in on this what you would call a primary trading zone, once peeling right back into it, because that's exactly what I see there, especially off that 2992 price resistance. I'll hone in on some key additional targets here, whereas we pop that level, maybe even have a pullback here up to 2717 for 7.4% in gains, up to 2992 for 18.7% in gains, 3163 for 26% in gains. Take that level out, we'll probably hone in on 3660 for 43% in gains, up to 3928 for 55% in gains. And if we take this level out here, again, that's an additional right there. Set some stops below 2992 for 7% in gains, 3163, 13.7 in gains, 3660 for 31% in gains, called 32% in gains, up to that 3928 mark for 40% in gains. And with the imminent arrival of the NFL season looming just around the corner, you have to think about the upsurge in the sports betting markets that annually happen every single year there, and talk about a key technical structure of this nature, just looking as bullish as ever there. Whereas I'll hone you in onto the data here, where you'll see these upswings around a seasonal trend, whereas August, September, the season begins. Then you have this massive spike during that Super Bowl, the last event of the NFL season. And then again, once you'll see a nice upswing right in the peak starting in September, big spike there, like a VIX like spike there for the Super Bowl in February. And then once again, you'll see these massive little spikes here in September. This was the 2020 COVID era, where the Fed just completely super juiced the private sector there with massive stimulus checks and stimulus for Wall Street. Well, that was a big spike there in sports betting. And again, that spike in the Super Bowl, last event of the year there. And then again, September once again, followed by a nice VIX spike into February. And then once again, you'll see it one last time here in 2022. Even though Powell was raising rates the fastest rate in history, you just have a massive, extraordinary amount of money still left in the financial system there. Honing in on that last spike there. So we'll see what happens. Keep you updated if I see any more significance here in the charts. But again, these are your key inflection points to watch. And I believe we've reached a key monumental inflection point, especially for short sellers, on a potential backfill the gap here, and a gap that's an unfilled gap, again, could completely scare short sellers to run and cover their position all at once in a crowded rush for the emergency exit doors.